Hi everyone, I'm Artur and welcome to Reimagine 2020. Today I have with me TJ and Dorjee from Perlin, a project that has been around for a couple of years since its Binance IEO, and since then has been up to quite a lot. So really excited to hear what you guys have been up to, and most importantly, what is now on the horizon. Welcome TJ and Dorjee.
Thanks, Artur. Hi, everybody. We're really excited to be here, and we'll be announcing some of our new developments, PerlinX 2.0. So again, very, very keen to support the community and to support Multi and Mousebelt. Just a quick introduction. I'm Dorjee. I'm the project manager, CEO of Perlin, and also introducing our product manager, TJ. TJ, over to you.
Hi everyone, I'm a product manager in charge of PerlinX. Yeah, so it's just working on all the DeFi products that we have. Yeah.
So, awesome. Yeah, great to have you guys here. So why don't we just jump right in? What is PerlinX? You guys recently announced a vision for it and have been kind of slowly delivering the various bits and pieces of it.
Yeah, so thanks, Artur. So first of all, I think, building on what you said about the history of Perlin, believe it or not, going all the way back to 2017. So we started Perlin and going back in time, it was looking at decentralized computing. And an original white paper was looking at all of the underutilized computing, server farms, etc. And then the dream obviously being mobile handsets getting more and more powerful. When we actually ended up doing the calculations on bandwidth requirements and the yield that can be generated, it was clear it wasn't feasible. Then the next thing we looked at was base layer. So at that time, this was 2018, this was around the time when there was still openings for new chains. And again, we started exploring that. By now, you can pretty much see that the ecosystems have been evolved. Then we started, the whole time we were also exploring trade. And the reason for that was because I'm a special advisor to the International Chamber of Commerce Secretary General, John Denton. The International Chamber of Commerce, if you don't know, is 100 years old. It's a not-for-profit and it regulates international trade. So anyone who has ever sent an international package or an international shipment has sent it using an Incoterm or a pre-agreed term or contract that the ICC invented. So that was 1937. And so basically they see the future of trade, especially with the trade war and some of the fragmentation in the system, as needing to have blockchain, needing to have decentralized infrastructure. And so that's what we've been building. And so when you look at all of the history of where we see cryptocurrency, DeFi, all of the infrastructure from blockchains, it's really where's the product market fit, where's the use case, and so that's what we've been tracking. So coming back to DeFi, we actually were researching 3 different fields. One was the trade finance aspect, particularly commodity finance using the International Chamber of Commerce's network. The second was carbon, and that's because I have a 13-year history in carbon. I was one of Time Magazine's Heroes of the Environment for a lot of the carbon work we did around early rainforest conservation for carbon. And some of my early clients were Rio Tinto, Merrill Lynch, people like that. So then the third area we were researching was DeFi. And so just, to bring it back, obviously the DeFi component has taken off the most because of COVID and because of the pandemic. Actually, trade finance has become hugely important, but we're hoping to see DeFi, commodity finance and trade finance intersect. And then carbon markets, carbon demand has really dropped tremendously, simply because the amount of emissions, the main driver for carbon markets were aviation, and aviation has been crushed. So just kind of that's the history, the backdrop. Now coming into PerlinX and especially 2.0, I'll let TJ talk more about the product in a second, but the vision really is, and this is really important for all of your viewers. Yes, there are some tremendous returns. There is also tremendous risk. So, if you look at what's happened with Yam, sushi, I mean, it's very hard in the real world to compete with those types of APYs or returns, yields. But at the same time, look at the code flaw that occurred and then the subsequent issues with Yam. Look at like an anonymous chef, Nomi, disappearing, reappearing. I mean, we're very clear. We're based in Singapore. We work with many, many institutional partners. We raise money early. We're listed on Binance. You know, we're not going anywhere. We've got 7 years runway, which we've publicly stated. So we know that this is a slow burn. And I think it's really important, like, because this is, you know, what the WTF DeFi, it's very important for people to know that there are going to be short-term hype cycles. That's just natural with tech. But you're really going to have to see, I think, another few years before you're going to get serious adoption in mainstream real world applications. And for those projects, they can't afford to just burn themselves out, you know, with unrealistic expectations. Even today, our APY, if you're to use the Pearls and balancer pools, we probably are paying out. I think it was we did a snapshot last week. We shifted from daily to weekly just because of gas fees, but it was 115% plus balancer rewards. So even to my normal brain, you know, annual, you know, sort of yield of 160%. I mean, mind blown. But in DeFi, people are like, yawn, you know, like they're you know, show me a few more zeros. So you know, I think it's very important for people to realize, like, there is a real application for DeFi coming, but you know, short term, you're seeing this type of a hype cycle. TJ, so I don't keep going on, why don't you give a very high overview, a product feature explanation of what we did for Balancer version 1.0, and then what we're releasing for 2.0.
Yeah, so PerlinX version 1 basically is we aim to create a user interface that is easy for non-DeFi natives to use. So it's just trying to combine the experience of balancer pool, and also in the V2 we will allow users to create synthetics using Perl. So our idea is that we will combine complicated protocols, and then we will try an easy to use interface that is easy to use, and hopefully that makes the whole learning curve of DeFi easier.
And actually later on, for the people who are sticking around, we'll give a demo of our brand new, beautiful, and that's to quote the UMA protocol team, UX. So we'll actually give everyone a walkthrough of what we're doing and what we've done. So later on, TJ will step in. But sorry, that was a first longer answer to your question, Artur.
Sounds good. Sounds good. I mean, it definitely a lot to kind of to uncover there, and just say, I mean, it's always I think it's so great to hear when projects in crypto or in blockchain or in DeFi are actually prioritizing usability and ease of use, because I think, like, with most of these, you know, products and protocols, this is somehow a word that doesn't seem to exist in the dictionary very often. But I guess my one thing I'd be interested to learn a bit more is that, so you mentioned that you got Perlin essentially has this, like, 3 pillars, and that there was the trade finance side, I guess, and now, like you mentioned, the DeFi side, and then the carbon side. I'd be interested to hear just like a quick kind of overview of what is the sort of the situation with regards to, like, blockchain usage in trade finance. Obviously, it's such a massive part of everyone's day-to-day world, and you know, Rome wasn't built in a day, right? You can't just, you know, upgrade the world onto Web 3.0 and overnight, right? So I'm sure you have a lot of kind of experiences and insights to share. What does that sort of look like behind the scenes?
So this is a whole new book another hour, Artur, but I'll tell you in a couple of simple analogies. So
Please.
For those of you who are based in Singapore, Hin Leong was the biggest oil trader, and they lost $5 billion in the recent price dump. The reason for that, and when the banks went in to claim collateral, guess what? Oh, those barrels of oil used as collateral had been triplicate, you know, quadruplicate pledged. So it's the simplest application of blockchain. They've used warehouse invoices over and over again. Like, how stupid is that? And so when you look at the centralized banking system, you've got extensive, painful back office processes to try to establish trust. And then even still, just because they have a big office and a big brand, and Hin Leong was only one of 4 bankruptcies that have happened this year that have totaled billions of losses. And this is just the simplest application. So just to come back to your question and how that trickles through is, if you look at any of the DeFi protocols, and there always is that gap between the real world and then the blockchain world. But if you look at all of the existing, kind of like big DeFi players, essentially they still cater to where you can have immediate collateral liquidation. Now the question is, in the real world, if I have a bill of lading, and that's a title document for a shipment, just to kind of explain, this is going back hundreds of years of shipping law. So even if you say that it's, let's just say, Artur, it's your shipment of soybean in the port, but then you get drunk and then drop your bill of lading, as a title document, I can pick that up and take your shipment. Like it's like no different to a Bitcoin wallet, etc. So the reason I explain that is, if you can create a NFT or some form of blockchain title document that represents that soybean, that's when it's a game changer, because essentially I can provide collateral, I can provide loans, I can do transactions which can have immediate liquidation, or let's just say it's a self-driving truck or a self-driving boat. Hey, guess what? Suddenly you can claim. And so this is the huge potential of trade finance. But just to give you the sad truth, maybe 25 years ago, they were trying to put bill of ladings into a digitized form. It's called the EBL. There were a few companies that were trying to do that. They were maybe sub 1% adoption. So really, there are sailors and shipping companies with shipping agents, with customs. I mean, these guys don't really want to change. But if you just look at DocuSign, the legitimacy of a digital signature has moved. If you look at Zoom through the pandemic, webinars have overtaken conferences. So it's really just a question of time before this happens. But to answer your question, it's still a while to go. But as soon as you have that type of real world to blockchain Oracle connection, NFT non-fungible bill of lading title documentation on blockchain, and actually last point is the Singapore government, the Saudi government, a number of even the International Chamber of Commerce, they're looking at creating these registers to at least address a blockchain register, to at least address the the double spend, the stupid types of these types of paper issues.
Right. Thank you for that. And I guess and how does DeFi sort of I guess fit into this? Will this kind of gradually then result, there's obviously pain points in the existing system, like you mentioned, that not benevolent companies are able to abuse it and cause that wreak havoc in in billions of dollars. So obviously there's problems, there's pain points. Is this where kind of DeFi somehow will start to gradually fit in then, or?
Yeah, so and again, very important for your viewers to know. I think anyone who comes out and says that they've solved it, they've figured it out, I think that they're potentially misguiding people, because I think that there's still a long way to go. But our experimentation started off going back in time. So to the issue that I just mentioned, we created the ICC trade flow pilot. Essentially, it was blockchain traceability for transaction documents in a big trade. We made the New York Times. So that pilot was in cooperation with the Singapore government, DBS, which is the biggest bank in Singapore, and Trafigura, which is one of the biggest traders, if not the biggest trader there. Their revenues last year were 190 billion USD. So those were the three parties. We shipped $20 million of iron ore from South Africa to China using our platform. And so coming back, when we look at DeFi, how would you finance that? If, let's just say, $20 million had been staked in a cryptocurrency format, and then let's just say, instead of having all of the back office So basically 1,000 documents would accompany that shipment. And then sometimes where like, let's just say from here to Indonesia, the documents take longer than the shipment. So the documents are still progressing through various back offices and customs, and then the coffee beans are going off in the port. And so if you just think about, if you had the DeFi collateral, if you had and what we're doing, for example, synthetic commodities, how do these new tools allow for the alleviation of the problems around the paper required for physical trade? The last thing I'll say is the pandemic has created, and this is to quote the Asian Development Bank, that they just put out a report about a month ago. Their report was $1.5 trillion. The Singapore government was, the ICC put out a similar study, which was more like 3 trillion. But this is the shortfall because now banks are firing everyone in trade finance because their returns are very low. It's LIBOR plus minus a few percent. So for all of that work, they're just not interested to do and take all that risk. They don't want to do it. So just to answer your question, it's not there yet, but there is going to be a DeFi solution. We even looked at a stable coin issued by the ICC called the trade coin, because you can kind of see that once you have deep enough liquidity, deep enough pools, capital formation, smart contracts, the right oracles, ownership documents, custody documents as NFTs, all self-driving, vehicles, IoT, it's really doable. And that's where Perlin is operating. We just short term, when TJ gives us a demo of PerlinX version 1 and version 2, you'll see that we're just starting with very simple products. We're really just trying to focus on, Perl as a collateral. So we've pushed through with the UMIP process, which is the UMA proposal process, that Perl is a collateral asset. We'll be issuing the PX USD, which is the PerlinX USD. But it's really just building, capital formation, Perlin as a collateral asset, the fact that you can have a yield dollar. How can that start parlaying into this ecosystem?
Right. And yeah, I'd be definitely very interested to kind of dig deeper into what is PerlinX and what are the plans with it. Shall we take a look? Do you guys want to sort of?
Yeah, you drive, TJ, and while he's loading that up, if you've given him control to screen share, so for anyone who's interested, why you would be interested to buy pearls is because when we do launch 2.0, we do have a joint agreement to create a very innovative liquidity mining program with UMA. We also, right now, we have ranged between $1 to $2 million TVL, meaning total value locked, because we haven't wanted to push it. This is actually the first press we're doing, so we're honored to be here, because we've just wanted to make sure that the program, the process, the platform, and the program works. So we've now done it for a month. We've been paying out, like I said, APYs of around 100 to 200%, including balancer rewards. So everything is ticking over. Look how beautiful that UI, man. Every time I look at it, I just want to dive in. Look at it, beautiful. So TJ,
definitely great job.
It's gorgeous.
Yeah.
We're very proud of it.
So a big component of the PerlinX is that we first started with pools for user to trade on. So users can choose to buy or sell the assets with PERL. So I'm just approving the assets to be used by the smart contract. So now that the approval is already given, we can proceed with swapping PERL into USDT. Yeah, so our aim is trying to lower the barrier and to smoothen the learning curve for users. Yeah, because some of the DeFi product, they are just like, I mean, they might look comfortable for the DeFi natives, but it's just might be a bit too complicated for normal non-crypto users. And so here is the part where users can swap their assets between PERLs and the accompanying asset. And then in the version 2, what we'll be releasing is the ability to mint synthetic with PERL through UMA protocol. So we can see that. So here it says that it is a synthetic.
So what does that mean to someone that's kind of, let's say, never minted a synthetic asset before, and let's say who doesn't even know what minting means?
Yeah, so in that case, it would be you are using PERL token as a collateral, and then you can have exposure to an asset without actually having it. So it's more of like, let's say if I have minted PX Gold, like maybe a synthetic gold token, and then if I choose to sell the gold token, it is as if I'm selling the gold while I don't really have gold. So it is kind of like a trade. But in the end, we will be like calculating the profit and loss in PERL token, which is the underlying asset. But in this case, we are looking to launch PX US dollar. So it is like a very simplified synthetic token to allow users to like try to experience the flow.
Yeah. So I'll give 3 just additional points. So on the technical side, what's really I think outstanding about what the team has achieved is we're taking DeFi primitives, Balancer, and UMA, making it beautiful, integrating it, making it usable. So just first of all, rather than a huge full stack project, this is taking, and we're going to do this integration work with many other DeFi primitives. So step 1 is it's an evolution from the DeFi ecosystem, just because we're stringing together and making it more usable and accessible. And I don't, for example, like when I look at our users, so in our IEO, we had 6,000 different PERL holders. That education process, because as you know, DeFi is new, its exposure is very limited. So step 1, I think, is opening up DeFi to the rest of the crypto community as well as to the wider community. Point 2 is what we're trying to unlock with the collateral and the PX USD is, right now, I personally am a bear on USD. The way that the US government is printing money like crazy, like how can it not be debasing the currency? And so, but there'll be other people who still think that it's a safe harbor, it's still the world standard. So what I'm doing is essentially creating a tradable two-sided marketplace for the people who believe for or against the USD without having to be dragged through centralized, fee structures and processes and paperwork and et cetera. So it's really opening up. Anyone with a MetaMask can now start effectively taking positions, on USD. And then the third perspective is if you're a PERL holder, essentially we're creating more liquidity, more usage for the PERL, but at the same time, we're creating more incentives for you to lock your PERL, reducing supply, reducing circulating supply. And so that also, we've seen price volatility on the PERL, better or worse, for good or for bad, for better or for worse, going from 2 cents to 10 cents to 6 cents to 2. So people are just getting their heads wrapped around it. And so if you want to learn about this stuff, just know that we're a really committed team. Jump in, start playing around with the tools. And we are very, very, absolutely, our top priority is safety of your funds. So that's why we're taking things very slow. We're keeping things low key. I'm not Chef Nomi. We're not going to disappear with funds. I'm not the YAM guy. We're not going to have code. So our code has been audited, the rewards contract, blah, 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 blah. So just, we're taking a slower approach to DeFi, but we still think that, 200% APY is not bad given the reduction of risk, and there's real use cases. Sorry, TJ, back to you steering. I was just clarifying different perspectives.
Yeah. So one of the features is that after the users have created synthetic assets, what they can do is also that they can add the collateral. So what that means is that because you need to maintain a value, your collateral value needs to be higher than your synthetic value. So if the collateral value does go down and maybe below a certain threshold, you would be liquidated. So that is to keep the system healthy, and whoever that buys the synthetic asset from you can really get their value. So if the PERL price goes down or goes up, a user would choose to maintain their position by adding PERL so that their collateral is, their synthetic asset is well collateralized. So we are just adding the collateral now.
And this is all running on Ethereum, right?
Yeah, this is all running on Ethereum. Yeah, you can see
and using UMA as the oracle and the asset minting platform as well, correct?
Yes, that is correct. So you can see that I just managed to add 10,000 collateral from 20,000 to 30,000 per, and then my collateralization ratio is about 7.6 now. In reality, our advantage of using UMA is that we can mint synthetic with the collateralization ratio as low as like maybe 150 or 200%. Yeah, but it's just high because I've been adding collateral unnecessarily. And so that after minting and adding collateral, a user should then be able to trade the assets that they have minted. So just now I've just minted the PXUSD. So what we can do is that we can sell. So if we are like kind of like selling a PXUSD into PERL, it kind of feels like that you're actually borrowing PERL with more PERL. Yeah. And then besides from doing that action, we also allow users to just redeem their assets. So they would redeem the 100 PX US dollar for the 30,000 per in this example.
So we're putting out, so we've got all of the user guides, everything done. But when so the way that just a bit of background. So basically the research around DeFi really picked up probably around July, August. And then this was when we started looking at which were the emerging protocols. And this is where our interpretation of the UMA protocol, was not easy. Actually, the maths and some of the work behind the smart contracts and understanding how to create the UX, we've already got a bunch of ideas for version 3. But yeah, just when we showed it to the UMA team, their full technical team and their co-founders last Friday. Was it last Friday, TJ? My days, I think it was last Friday or Thursday. And they were just blown away. They kept saying, this is beautiful. Their forte is not to create user experiences or user interfaces like this. That's what we've tried to do. And it was really, really gratifying. Like our team, they did still have to work over the weekend to QA it. But we were really excited to present this. The UMA guys then played with it and QA'd it, gave us a bunch of feedback. And that's why we're really excited to actually officially launch version 2 at this this WTF DeFi conference in your honor, Artur.
Thank you. Pleasure to be the first one to see it. It does indeed. I mean, honestly, yeah, it looks great, and I can't wait to play around with it myself as well. Maybe you guys can also give explain a little bit what is the I guess so you're starting off with the PXUSD as the asset, and you've mentioned that the goal is to kind of to really widen the available kind of asset universe. Which direction do you see that kind of going in?
Yeah, sure. So I mean, like our vision. So as you can see, once you've got PERL and you're creating the collateral base, you essentially can then theoretically, if we get the price feed accepted, and if there is a community around this particular commodity, we see initially there's going to be a lot of interest just because the crypto community likes to trade crypto. So that's why, the USD is one, but, whether it's, let's just say that there's controversy or two opposing sides around Wi-Fi. What would it look like if there was a PX Wi-Fi where some people are wanting to go synthetic long, synthetic short? But our long-term
Mhm.
arc really is towards the real commodity world, like the friction that you see in the real world around both centralized governance, banking rules and regulations, Basel IV compliance. That's really where we are making a greater efficiency leap. And so really, eventually as well, what we see, and this is, after 13 years, I got to say, I think that there's a very good chance Trump will lose on the 4th of November. If he does, Biden, they've already committed to huge carbon market strategies. That's where, for example, and carbon, even in spite of Trump, traded about $220 billion of volume last year. So, it's kind of like, how do you create a PX carbon? How do you create these new innovative synthetics? And that's really where, the difference between us and some of these, we look up to synthetics, but we see that potentially by having a community-driven protocol, a community can say, hey, let's create a trading market around this synthetic asset class, and it can move, quicker and in a more long tail fashion. So long term, we still see PX commodities, as being a very active new innovation as a piece of infrastructure. But short term, we'll probably be looking at, some of the what crypto community members would like to see.
Mhm. Got it. Got it. And I think like another thing which I noticed is, yeah, as I mentioned that, or as you mentioned that you're using UMA as the oracle, and the swapping itself and the pools are being are done by a balancer, right? And I think this is like a great example of how kind of how collaborative DeFi is, and I do kind of know that you guys actually are working with a number of other projects as well. Can you share a little bit more about that?
Yeah, look, I mean, I think the good thing about I really think that everyone goes through a journey when they're in crypto. So believe it or not, my first crypto experience was I bought Bitcoin at $500, $600 in 2014. And then I co-founded a Bitcoin tipping bot. And like, you basically at first are not sure, like, because you're programmed to kind of rely on structures. And so, coming back to your question, the way that we kind of see the evolution of this market, if I'm going to fork something and then simply offer more rewards, and then, in some ways, like, and there's been a lot of commentary about it, I don't need to repeat it. How do you kind of be accretive or additive to the community? Like coming in, forking Uniswap, offering rewards, and then taking a whole bunch of liquidity, and then, don't get me wrong, I mean, it's part of the ecosystem, growth cycle. But yeah, to answer your question, we are very collaborative. Right now, we don't want to disclose too much more about where we're going to go for version 3, but we are working closely with some of the really respected thinkers in DeFi. UMA, we actually, what was funny was when we started to work with them was early July, no, June. And, just seeing them become the most valuable DeFi unicorn, they peaked at like 1.3 billion, something insane. And, the whole time we were doing weekly calls with them, just going, so guys, does it feel any different now that you've got like $1 billion? And they were just like laughing, because I think the people who are well grounded in this space, they know that like these types of blips, it's like a video game. They're real, but not real. But it's really going to be when you've got, so, we work closely with, for example, the Ren team, and, just seeing so going back a year, Lung was talking about, how they're going to start wrapping BTC, Ren VM, the dark nodes. Now the dark nodes are paying out real money because they have, last count, like 150, $190 million of BTC. They're second only, to one other player. And you can see, why wouldn't the other 99% of Bitcoin get wrapped and start farming and doing other stuff? So there is a real market here, and there are real players. But you just have to kind of wade through the frothiness. So, you know, like we can, you know, later on, give us a couple of weeks. We're just shipping version 2.0, so we don't want to distract people. But right now, we're really proud of working with Balancer, really proud of working with Uma, and we want to be accretive. So also, if any projects out there want to show us some of the new stuff that they're doing, we inherently don't believe it makes sense to reinvent the wheel. So we really don't want to, you know, if there's someone else working on it that's competent, like let's not duplicate. And secondly, we want to give credit where credit is due. So it doesn't make sense to us to fork something, you know, offer more rewards to the community, get a pump, and then jump. We've got 7 years, we've got 3 years of history, you know, like, so we want people to be able to trust us as a collaborative partner, not fear that we're going to, you know, rip and strip or do something untoward.
Got it, got it. I'm sorry for the noise. It seems someone's bought a new chainsaw and they're testing it right in front of my house.
That's the sound of the DeFi,
this has been a great
DeFi market cap.
Yeah. This has been a great overview so far, and I guess I know you guys are super busy, and so I'm trying to wrap this up here. But what do you guys need help with the most from your community with the new project, with the new version coming out?
Yeah, look, I'll let TJ give any specifics, but for me, as at the top level, look, first of all, we're incredibly grateful to the community for giving us the you know, I call it the rope to hang ourselves. We've got 7 years of rope to hang ourselves. We went through a lot of change, meaning we had to, for example, do a token swap. So right now, out of a billion plus minus tokens, only 40% have been swapped. So we're continuing to go through that process. Obviously, Binance has been super supportive. Then we've released 1.0 and we've started to get pools. We estimate about 5% of our token holders max have really started engaging with our pools. And then we're going to release again, you know, version 2.0 with the UMA synthetics opportunity. And so again, we think that there'll be even a smaller proportion because, you know, DeFi is not for everyone. So there'll either be churn where people sell out of their tokens and come into new tokens, you know, because they go, you know, I don't know whether I understand DeFi or want to participate, or we're going to bring people up the learning curve. And so ideally in a fantasy world, if we had 100% conversion, that would mean 6,000 new people, you know, minting, staking, swapping, you know, basically using our platform. And so really it's just to say, right now, we haven't changed our tokenomics. We're still a fixed supply. We have got 20% treasury, which we'd always, you know, had in mind to offer as incentives for active participants. We are weekly giving away right now 1 million tokens. We've just finished our first month. So we've given away 4 million pearls. When you layer on the balancer, it's been a pretty healthy APY. We know that we've been impacted by the gas prices. We've also been impacted by the expectation management issues around yam and sushi and all of the other types of food related tokens. So you know, we're plugging away. To answer your question, from the community, just give us a look, play around with some pearls. We're introducing the ability for you to use more pearls, less collateral, meaning like, you know, other types of tokens. We're going to continue to provide rewards. We welcome feedback. And, you know, just if everyone in DeFi took a bit of a chill pill, that'd be great. Like, I think that it's the best, like it's the best industry in terms of like, you know, you just need to go to a bank to open up a bank account, stand in queue, get interviewed, show all of your shit. Like, you know, crypto and DeFi is phenomenal in terms of innovation and speed, but everyone just has to take a damn chill pill. Like, expectations on token pricing has nothing to do with us. We're working as hard as we can to build real products and product market fit. But, you know, like people who get angry because they bought in at X and then they're now it's down to Y. I mean, you know, it's kind of like getting angry at nature. I mean, like, these market conditions are, you know, how do you explain them? Is it correlated to the market, the stock market? Is it not correlated? Is it correlated to the Fed printing money. So my one request would be get involved, give us feedback, know that we're legit, know that we're moving hard. Like we've just shipped 3 versions in, 3 major, versions in 2 months. We don't think that this is sustainable. Like we just wanted to show the world that we're in DeFi. But yeah, one would be get involved, buy some Perl, play around. 2 would be take a chill pill. Like, we're trying our hardest and we do believe that the total, like, so for example, like Ren, if you look at Ren, if you have a dark node, you're actually being paid out a yield because of the various value creation you make by wrapping BTC. We are searching for that similar type of, toll booth where you take a clip. So that's why I think the beauty of DeFi is there are actual transactional value creation models where you can have a yield ratio or you can have some type of, calculatable valuation. But we're working on it. So that's my request. TJ, did you want to ask for anything? He's the long-suffering product manager, so that's why he looks so tired and so worn down. But TJ, here's your chance.
Yeah, I think maybe the first contribution from community is that we would like to know what is the synthetic that you want to see that you can mint with Perl. And then maybe on the second part would be maybe if there's any exciting project that you think we can work with them and add value together, yeah, please recommend us the project. Yeah. So that'd be all.
Excellent. I mean, I think these are very fair requests, and I think in terms of the DeFi chill pill, the market's kind of force fed that to many people over the last week or so. Anyways, I just have one quick question, one word question to you both. If you had to describe DeFi in one word, what would it be for you?
I'll say potential. TJ.
Yeah, I'm still thinking. Yeah, it doesn't sound good, but I would say it's complicated. But that is exactly our aim, is to simplify it. Yeah.
Ah, nice.
That's a great answer.
All right. Maybe your word, TJ, your word is simplifiable.
Simplifiable. Yeah. That sounds good.
Great. Thank you so much again, TJ and Dorjee from Perlin, and really looking forward to trying out the version 2 and excited for what's to come.
Thank you, boss. No, really appreciate it, Artur, and the work you guys are doing to bring education is critical. We need as many unbiased sources as possible. So thank you.